so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Something absolutely insane is happening in the housing market. And I'm almost speechless as to how many forces are attempting to transition the housing market back into a buyer's market, or as Jerome Powell said, reset the market. And also, you guys, I'm really sorry. This is my update video. I was not able to get this out on Thursday. You guys know I wait till Thursday. My bad, you guys. But today we're going to look at all of the stuff that we generally look at. I'm going to add a couple charts as well to take a look at where households are at as far as savings. Are households in good shape like we're made to believe, or are we in bad shape like I feel, right? Like we feel. But we're going to explore Fred Economic Data's 30-year fixed rate mortgage. So we're going to see what the average 30-year fixed rate has gone up to. Then we're going to look at the average saving rate of Americans. So we're going to look at the savings rate. Then I'm going to jump on my MLS and we're going to look at recent price breaks in my local market. And you guys know I stick with Kingwood. I had to pick one city. I wanted to stick with it for you guys. So you guys saw the trend. So I'm kind of stuck with Kingwood for now because I don't want to start over on essentially showing you guys, how the trends work. So we're going to look at the trends, look at price cuts in my local market. And then we're going to end once again at looking at the 10-year and the 2-year bond yields. Okay. Because again, incoming recession, almost everyone can agree that when we are in a confirmed recession, things are going to get a lot harder and a lot worse for the housing market as far as it being that seller's market. Obviously, if you want the market to transition like I do, it's all good news so long as you prepare. And another thing, you guys, I really want you to understand the message that I'm trying to give in my videos. Am I sounding the alarm? Yeah, I'm sounding the alarm, but did I make the mess? No. Have I been talking about it for 2 years? No, I've been talking about this stuff for about 4 months. And you guys, the real core purpose of these videos is to give you guys back value on each and every video. And the value is this. So what that we have an impending recession and an impending potential crash in our housing market? Do something about it. As long as we know what's coming or suspect what's coming, we could prepare, right? Prepare for the worst, hope for the best. In 2008, I was a victim. In 2022, I'm going to be a winner, and I want to take you guys there with me. And I don't want you guys to make the same mistakes that I did. So I really hope you guys are getting that, from my videos. Comment below. Let me know, what else I could talk about as far as giving you guys back value. But, it's really hard right now because all we could really do is have self-control and wait, right? And improve our situation. We can't really get out there and find any type of good buying opportunities because there's not really any. And the ones that are out there, still bidding wars going on. But either way, you guys, we're going to get started right now. But remember, this is my YouTube channel. I do try to get you guys a video out every single day. For my efforts, please do me a favor, like this video so I could spread the message. Subscribe if you haven't. And as always, guys, comment. When you guys comment, you help a lot of people. A lot of people just come to the videos. This is crazy, but just to read the comments. So I want to really, from the bottom of my heart, to thank everyone that is really putting time and effort into the comment section to share your insights and to share your intel. I really appreciate that, guys. There's a lot of value in our comment section, so thank you. So what we're going to do first is jump into the Fred Economic Data 30-year fixed rate mortgages. Now, remember last week, I suspected the rates were going to surge again this week. They did not surge again this week. So I think we're finally starting to see a pattern from the Federal Reserve. So I think I can kind of talk and more accurately predict where the interest rates are going to go. But take a look at this chart right now. Okay, guys, so obviously the rate was 5.78. It is now 5.81. So that's 0.03 basis points. It's really an intriguing pattern, guys. So essentially they just shot up, right? So I thought that it was going to skyrocket, but I thought it would be a little bit more of a, I didn't think it would be as steep as this, to be honest with you. And it's steeper. This is a steeper jump in interest rates. So we're starting to see a pattern. It's not really a gradual thing. Every time they meet and raise the federal funds rate or start selling mortgage-backed security, it's a massive spike. And this should tell you really how much power and control the Federal Reserve has as far as money and the housing market, because the housing market is affected by money, obviously. But again, you guys, so it did plateau week over week. And what I suspect is going to happen is this is probably going to continue to plateau, which means go up and down a little bit week after week until the Federal Reserve meets again in July. I believe when they meet again in July, we're going to have another probably 50 to 80 basis point hike on the interest rates. And then probably after that, just like right now, it's probably going to plateau until September. When September comes, they're going to double their asset selling program to, I believe it was over $90 billion. It was 90 and some change, but $90 billion. So I expect a spike in July, spike in September. Now, in between that time, I don't know exactly what's going to happen to the rates. More than likely, it's going to be doing plateauing based on what the Federal Reserve has been doing. So I'm basing that off of the pattern that I'm saying. So right now, it's probably going to be a little bit safe. It's not going to be too urgent to lock your rate. You may be able to lock your rate if you wait at a lower rate because of the plateauing, the up and down, slightly up and down. But overall, you guys, I think we're going to have a skyrocket July and a skyrocket again in September. But that's your average interest rates, you guys. I know historically it's not high historically, but remember the values back in 1970, 1980, right? Remember the housing values. So you can't really say that interest rates are you can say they're way lower than before, but also take into consideration home values aren't $20,000 anymore. When home values were $20,000, you could get away with the 20% interest rate. The average price right now is like 400,000. So obviously we can't do a 20% interest rate. So put it in perspective. In perspective, interest rates are higher than they have been since about 2009. That's roughly 13 years. So, nevertheless, even though in my opinion is rates are low. Okay. That's my opinion. They are still low, but understand the rug pull, right? It would be okay for rates to be this high if home values also went down. But the problem is the home values haven't really gone down yet. It is what it is, guys. Expect interest rates to continue to go up. Expect those interest rate increases to continue to change the market over to a buyer's market. And I do not expect Jerome Powell and the Federal Reserve can get us into a soft landing, or rather prevent us from going into recession. I actually think we're in recession now, and we'll cover that at the end of the video. But right now, let's take a look at the average savings for American families. Now, I've heard from so many professionals, Jerome Powell, the Federal Reserve, about how well off families are. So essentially, we can handle runaway inflation, right? We can handle that. But the reality is Americans right now are losing so much of their savings. It is unbelievable. Look at the stock market. How many people lost tens of thousands, if not hundreds of thousands of dollars recently in the stock market? Like this. Everything is changing. Take a look at this chart right now. Okay, so here's a Fred is so cool, you guys. They have so much data. Here's a personal savings rate, and this is over a year. And I just want to point out, let's go back 1 year. So 1 year ago, people were able to save 12.6% of their income. So 12.6 stands for 12.6% of their income. And if you ask yourself, how were Americans, saving so much money? Well, first of all, everything was a lot lower. Gas prices was a lot lower, food prices, and excess stimulus. We didn't need all this stimulus. So people were, this looks like 12.6%, but the reality is we were in a really, artificially and created environment, and we got a lot of quote unquote free money, even though it wasn't free. So anyways, it's really interesting to point out, guys, we were saving 1 year ago 12.6%, but now fast forward today, Americans are only saving 4.4%. That's nearly down. Okay, so savings are nearly down in 1 year, 60%, you guys. So the Federal Reserve thinks, Americans are in such good shape, but from 1 year, year over year, Americans, as far as savings, as far as the ability to save, that's down 60%. So what I'm telling you is America's not well off. Families are not well off. Everyone was whiplashed and rug pulled, right? This is absolutely crazy. But again, you guys don't have to be a victim. I'm not going to be a victim again. I'm going to be a winner, and you guys can be a winner too. It just means we need to have more self-control and more discipline to increase our credit, our savings, and our sources of income, right? It's basically those are the three things. And also educate yourself by watching your local market. But you guys, Americans are bleeding savings right now. Now, what I want to do is I want to show you guys some price cuts on my local MLS. Check this out right now. All right, so you guys know I'm sticking with one city, Kingwood. I could have picked 100 different cities. I chose Kingwood, which is north of Houston, south of New Caney. Okay. Here it is right here. So let's go ahead and take a look and find some price cuts. But before I do, I took out the pending sales here. This is just active inventory. Look at how much inventory has gone up. If you've been watching my update videos, you know my inventory has exploded in my local market. So this is super refreshing to see. Okay, guys, but let's just start finding some price cuts right now. Here's the first one I want to show you guys right here. Okay, this is reduced to 281. It's been on the market 68 days. It has gone down. You guys ready for this? $34,000 price cut. So we got a $34,000 price cut right here. I just want to show you that price cuts are going on everywhere in my local market. Let's find another one right now. All right, here's another one right here, guys. Let's pull this up right now. All right. So, and this is a real nice house. This has got a pool. It's not real old. Been on the market for 11 days, you guys. So it's been on the market for 11 days. Took a price cut of $27,000. So we had a 34,000 price cut. Here's a $27,000 price cut. Super nice house with a pool, really in a nice area. But look at a massive price cut again. So it's happening on old houses, it's happening on, refurnished houses, it's happening all over the place. Let's find another one. All right, here's another one right here. Let's pull this up. Okay, so this has been on the market 23 days. It was originally listed for 449, and they just did a price cut about 2 days ago for $50,000. You guys, so price cut of $50,000. Remember when there was overbidding and people were going over asking for $25,000, $50,000? Fast forward just 2 months, now we have price cuts at $50,000, and that is why you should have waited if you bought. But if you still bought, just have the right mindset, hold like crazy, and you better start saving your money. But you guys, $50,000 price cut, that is crazy. So I'm starting to get massive price cuts. And look at $126 a square foot. That's more in line with, with my market. Let's look at another house. All right, here's one right here. Let's take a look. Okay, so this has been on the market for 29 days. It was listed for $379,900. It's now listed for $359,900. That's a $20,000 price cut on 29 days on the market. It's a pretty nice house as well. But again, you guys, I'm just showing you what's happening in my local market because like I said, there is no guessing. This is happening and it's happening pretty quickly. Here's another one. Let's look at this right now. Okay, let me pull this up. Take a look at this. Okay, this has been on the market for 100 days. It's now up $129 a square foot. It was listed at $310, now listed at $278. That is a $32,000 price cut. So obviously, you guys, in other words, it's changing. The market is transitioning into that buyer's market. Again, with a recession, it is only going to make these trends spiral even more out of control. What we're seeing right now is we're seeing price drops on listings that are essentially overvalued and overlisted, right? What we want to see is listings that are more reasonably priced. And that's why I always tell you guys, I set a marker of $120 a square foot. So I know that when houses start coming on the market at $120 a square foot, then my market is cooling down, is changing, negative equity is coming, right? So that's what we also need to see. And then we also need to see homes sell for under market, right? We're seeing these overpriced listings. We need homes sold for under market value. Once we start seeing that, it's going to spiral out of control. Again, the recession is only going to make that worse. But what I want to do now, guys, is I want you guys to take a look at the 10-year and the 2-year treasury notes right now, which remember the 10-year and the 2-year is one of the leading indicating factors, economic factors, that is going to essentially warn us of an impending recession. So if the 2-year is higher than the 10-year, it's inverted. And that again is the indicator. The 3-year and the 5-year is already inverted. I believe last week there was a 13 basis point difference. Let's see what it is this week. Okay, so as you guys can see, this is as the end of the day on the 25th. This is 11:26 a.m. Eastern time. So here's the 2-year right here at 3.06. Here's the 10-year. So it's 0.07 or 7 basis points difference from an inversion. So it's getting really, really tight. This is probably going to invert again. I'm expecting it's going to invert again no later than the end of July. So I'm saying the 2-year and the 10-year are going to invert no later than July. But look at the 3-year is already higher than the 10-year. The 5-year is already higher than the 10-year. So the 5 and the 3 are inverted. Once this inverts, again, another signal of a recession. But again, you guys, we need to confirm confirmed quarters of negative GDP growth. So even if Q2 comes out and it doesn't technically show negative GDP growth, let's not forget we're in runaway inflation, and those inflation numbers are going to taint the data. So even if they don't call a recession, I still think we're in a recession. But what I'm saying is a confirmed recession is really going to melt down this housing market. Other than that, you guys, this is just a slight update. There's some insane things going on in the housing market. Almost made me speechless. Almost. Obviously, it hasn't. But I really appreciate you guys watching this video with me. I hope you guys are seeing the trends as I'm seeing them. And I hope you guys see them speeding up like I do. Now, if you're in a market that's not yet cooling down, be patient, you guys. Look to the nation. Some metro areas are still super tight, and there's still a lot of demand and not a lot of supply. So stay patient. Now, in the meantime, you guys, just work on your credit, work on your income, work on your down payment and savings, and love your family. If you're out there investing in real estate, I do wish you luck, and I hope you win.